High-tech venture Berhad, sector industry, industrial product and service, steel manufacturing and steel product. Their core business, steel pipe hollow section steel product, hot rolled coils, and scaffolding manufacturing and rental. Target market, construction and infrastructure companies, property developers, and industrial contractors. Their competitive position integrates steel operation upstream and downstream, wide product and serving range, strong domestic market presence, benefit from large-scale steam facilities, and competitive despite challenging steam market conditions. The second company is PA Resource Berhad. PA Resource Berhad sector industry, industrial product and service, aluminium extrusion and fabrication. Their core business, aluminium extrusion and fabrication, aluminium billet manufacturing, custom aluminium profile. Their target market, construction and property sectors, solar and renewable energy industry, and industrial manufacturers. Their competitive position, integrated aluminium extrusion and smelting, strong focus on process efficiency and quality, exposure to fast-growing solar industry, consistent revenue growth and dividend payments, position for sustainable long-term growth.
For the financial year 2025, in accordance with Malaysian Financial Reporting Standards, under MFRS 15, both companies recognize revenue at a point in time upon delivery of aluminium and steel products respectively, indicating the transfer of control to customer. MFRS 11C is significant due to the capital-intensive nature of both industry. PA Resources focus on factory machinery and buildings, while High-tech Venture Berhad relies heavily on industrial plants and steel processing equipment. Lastly, under MFRS 102, inventories are valued at the lower of cost and net realizable value. Both companies are exposed to global metal price volatility, which affects inventory valuation. Overall, these standards ensure transparent and consistent financial reporting for both companies.
For PA Resource Berhad and High-tech Venture Berhad between 2024 and 2025. For High-tech Venture Berhad, revenue decreased by 14.59%, however net profit increased by 2.74%, total assets decreased slightly by 0.47%, total liabilities decreased by 50.47%, and total equity increased by 7.23%. For PA Resource Berhad, revenue decreased by 4.70% and net profit declined significantly by 31.23%. Total assets increased by 8.29%, while total liabilities rose sharply by 35.44%. Total equity also increased by 5.21%. Overall, High-tech Venture Berhad shows stronger financial stability with improving profitability and lower debt, while PA Resource Berhad faces higher financial risk despite asset and equity growth.
Vertical analysis in major asset. In common size analysis of statement of financial position for company PA Resources, inventories and receivable increased in 2025 while cash decreased, showing that higher cash usage. Fixed assets also slightly declined. For High-tech Venture, investment and fixed assets decreased while inventories and receivable decreased. This show better asset management and stable liquidity. Overall, High-tech Venture has stronger and more stable asset structure. PA Resources relies on inventories and receivables, resulting in a lower liquidity. Next is for profit margin and major expenses. For company High-tech Venture Berhad, common size analysis of statement of profit or loss show that cost of sales increased, reducing operational efficiency. However, profit after tax rose from 6.38% to 7.67%, mainly due to associate income. For PA Resources, a slightly drop in cost of sales, meaning production costs improved. However, operating expenses increased, which affected profitability. Even though tax was slightly lower, the profit after tax still declined. This tells us that the profit margin fell mainly due higher operating costs. The comparison between these two companies is PA Resources profitability decreased due to higher operating expenses, while High-tech Venture Berhad rely on associate income for a higher profit margin. Overall, company PA Resources is more operationally stable whereas a company high-tech venture Berhad is riskier.
Next, for ratio analysis for HTBP. So for gross profit margin, 2024 have the better year and the better percent. And then for net profit margin, 2025 have the higher percent and the better year. And also return on asset, 2024 have the higher percent. And then for current ratio, 2024 have the better stronger short-term liquidity. And for quick ratio, 2024 have the better ability to make liability with the inventory. And also account receivable turnover, also 2024 have the faster receivable collection, and also they sale uncollected. 2025 have the shortened collection of period. And debt to equity ratio, 2025 have the lower reliance on debt reduced financial risk. RB company, gross profit margin, 2025 have the better year, and net profit margin, 2024 have the better year, and also return on asset, 2024 have the higher percent, and current ratio, also 2024 have the better year, and also quick ratio, also 2024 have the better year. And then account receivable turnover, 2024 have the better faster collection on receivable, and also they sell uncollected. 2024 had a shortened collection period. Then debt to debt equity, also 2024 have the lower financial risk due to less debt. Conclusion, BARB is the better company because it's the most stronger liquidity, lower financial risk, and more consistent profitability compared to HTBP.
Valuation and investment decision between Yaptec Venture Berhad and PA Resources Berhad. In terms of profit trends, Yaptec recorded lower sales but managed to keep its net profit stable. However, PA Resources also experienced a decline in sales with a significant drop in net profit. Looking at the cost structure, Yaptec has higher costs which result in lower profit margins, while PA Resources operates with a more efficient cost structure. For liquidity, Yaptec shows a moderate position, whereas PA Resources demonstrate very strong liquidity with high current and quick ratios. In terms of debt management, Yaptec relies more on debt financing, while PA Resources maintains a low debt-to-equity ratio, indicating lower financial risk. Regarding industry risk, Yaptec is exposed to cyclical steel industry risk, while PA Resources faces lower risk with better growth prospect. Therefore, PA Resources Berhad is selected for investment due to its strong liquidity, lower debt level, and more efficient cost structure.